everyone, and welcome back for another deep dive. Today, we are looking into all those financial oops moments, the money mistakes that can really come back to bite you later on down the line.
Yeah,
And we've got some great sources to help us break all this down.
that's right.
We've got a really fun podcast episode with a couple of super enthusiastic hosts. And then we also have this really concise article.
Yeah, both are jam-packed with tips and tricks to kind of help you avoid those, if only I had known back then, financial regrets.
Right. And what's really cool is that these insights are super relevant wherever you are in the world.
That's right.
Oh.
Yeah. So we'll be looking at global trends as well as any kind of regional nuances so that no matter where you were listening from, you can use this information to hopefully make smarter money choices.
All right. So let's jump right into it. The first mistake that our sources really highlight is not investing early.
Yeah.
And we hear this advice all the time, but I really liked how our sources broke down why this is so important.
Yeah.
It's not just about compound interest, right? It's really about time.
That's right. It really is about time. I mean, think about it this way. If you invested just $100 today and let it grow at a decent 7% return, thanks to the rule of 72, that money will double roughly every 10 years.
Wow.
So in a decade, it's $200, then it's $400, and so on.
Yeah.
Just imagine that snowball effect over 30 or 40 years.
Yeah, that's a really great concrete example that I think really makes it hit home for a lot of people.
Yeah.
And what's also cool is that it's never been easier to get started with investing.
Right.
Our sources mention some familiar names like, Robinhood, TD Ameritrade. Those are really popular in North America. But then there are also other platforms like Zerodha and Grow that are making waves in India.
Right. And get this, even real estate crowdfunding is gaining traction in Dubai.
Wow.
Can you imagine owning a sliver of a Dubai skyscraper?
That's crazy.
It's fascinating how these platforms are making investing accessible to just about everyone,
right,
wherever they are.
Okay, so after that really eye-opening example, I got to ask. Yeah.
What is one small step that you could take this week to start investing?
Yeah.
Maybe it's just researching some of the platforms we talked about, or even setting aside just a super small amount to invest regularly.
Yeah.
Even if it's just like $5 or $10 a week.
Yeah.
The key is to start and get that snowball rolling.
Absolutely. The key is to get started.
Yeah.
Doesn't matter how small it is.
Right.
The important thing is just get going.
Okay, so moving on to our next financial pitfall.
Yeah.
This is relying solely on one income stream.
One income stream.
Yeah.
Big mistake.
Yeah, and something that we've learned, especially after the pandemic, is that job security just isn't what it used to be.
It's not as ironclad as it once seemed.
Right, and our sources weren't just doom and gloom about job losses and all that.
Right.
They were actually pretty optimistic about the rise of side hustles.
Yeah.
And multiple income streams.
Multiple income streams, very important. Yeah, and what I find really fascinating is how this trend is taking different shapes in different parts of the world.
Yeah.
So in the US, we're seeing freelancing and e-commerce just explode.
Right.
While in India, we're seeing remote work and all those gig economy jobs just booming.
Yeah, and in Dubai, Dubai's going all in on digital entrepreneurship, especially with those tempting tax-free business setups.
Right.
It seems like everyone is kind of catching on to the idea of having multiple income streams.
Yeah.
Both for financial security and just for exploring new opportunities.
Yeah, for sure. I mean, why not?
Right.
So here's a question for everyone listening. What unique skills or passions do you have that you could potentially turn into a side hustle?
Right. Well, what could you do?
Yeah. Maybe you're amazing at coding, or you create awesome artwork, or you bake delicious treats. Could you maybe offer your services online or at local markets or even through social media? There's so many options out there.
There's a whole world of possibilities out there just waiting to be explored.
Right. All right. So moving on to mistake number 3. Living paycheck to paycheck.
Oh, yes.
And this can be a trap even for people with decent salaries.
Yeah.
Our sources pointed out how easy it is to fall into this cycle of overspending and lifestyle inflation.
And it's interesting how this kind of plays out differently across regions.
Okay.
So we're seeing rising living costs squeezing budgets in Canada.
Yeah.
While in India, there's this growing desire for luxury upgrades.
Right.
Even if it means stretching finances really thin.
Yeah, and then in Dubai, even with those tempting tax-free salaries, expats can find themselves struggling with the high cost of living, especially if they haven't adjusted their spending habits.
Right, they haven't sort of adjusted to their new environment.
Right.
Yeah, and sometimes we fall into this trap because budgeting just feels restrictive.
Yeah.
Like we're depriving ourselves.
Right.
But I think of it more as a way to consciously decide where my money goes and what I truly value.
Yeah.
That way you can actually enjoy the things that really matter to you without feeling financially stretched.
Absolutely.
Yeah.
So instead of thinking of budgeting as like punishment,
Right.
think of it more like a tool to kind of align your spending with what your priorities actually are.
Yeah.
There are so many different budgeting methods out there.
Yeah.
From, the classic 50-30-20 method to all those tech-savvy budgeting apps.
Yeah.
So just find what works best for you.
Yeah, and experiment with different approaches.
Right. The goal is to track your expenses, identify those little spending leaks.
Yeah.
And make sure that you're not mindlessly swiping your card every chance you get.
Right. Be conscious.
Yeah.
Be intentional.
Okay, so moving on to a mistake that can have some pretty serious consequences.
Yeah.
Not understanding credit and debt. And our sources did a really good job of painting a picture of how debt can quickly become a burden.
Yeah.
Especially if you don't really grasp the terms and conditions.
Right.
And they highlight some really relatable examples. So in the U.S., you've got student loans and credit card debt.
Yeah.
In Canada, there's mortgages and personal loans.
Right. And then those tempting buy now, pay later schemes.
Oh, yeah.
That are gaining a lot of popularity in India.
Right.
And let's not forget about those stricter consequences of unpaid loans in Dubai.
Right.
Where it's not just a financial issue.
Yeah.
But it becomes a legal one.
Yeah. So it's not just about borrowing.
Right.
It's about being smart about it.
Right.
So our sources really stress the importance of only borrowing what you can realistically repay.
Yeah.
And this one's crucial. Always paying those credit card bills on time.
Absolutely. Those high interest charges can turn into a financial avalanche if you're not careful.
Oh, for sure.
It's like a game with really, really bad rules.
Yeah.
So building good credit is essential no matter where you live.
Mm-hmm.
So make sure you really understand how credit works, build healthy habits, and treat it with respect.
Okay, so imagine this. You're cruising along.
Yeah.
Feeling pretty good about your finances.
Right.
And then, bam, life throws you a curveball. And that brings us to mistake number 5. Not having an emergency fund.
Emergency fund, very important.
Yeah, our sources really emphasize this idea of the unpredictability of life, highlighting scenarios like sudden medical bills, unexpected job losses, or those car repairs that always seem to happen at the worst possible time.
Right, when you can least afford it.
Right.
Murphy's Law.
Exactly.
Anything that can go wrong will go wrong at the worst possible time.
So they recommend aiming for 3 to 6 months of living expenses tucked away.
Yeah, have that safety net.
Yeah, and how you save for that can vary a lot depending on where you are. So in the U.S. and Canada, high-interest savings accounts are popular.
Right.
In India, fixed deposits, or FDs, are a common way to kind of set aside funds. And in Dubai, those handy digital banking apps are making it super easy to set up dedicated savings goals.
Right. Technology can be a great tool for achieving your financial goals.
Absolutely.
Yeah.
So the key is to find a method that fits your lifestyle and makes saving a regular, almost effortless part of your routine.
Absolutely. It should be something that you don't even have to think about.
Right.
It just happens automatically.
Okay, so on to the last mistake that we're going to be talking about in this part.
Okay.
Not learning about money. And it's crazy how financial literacy is rarely taught in traditional education.
Right.
Even though it impacts every aspect of our lives.
Right. You'd think it'd be one of the most important things.
Yeah, right.
But it's not.
So our sources really emphasize self-education.
Yeah.
And the good news is there is a ton of resources available no matter where you are.
Yeah.
YouTube is amazing for financial advice.
Absolutely.
There are tons of books and articles dedicated to personal finance.
Yeah.
And of course, podcasts like this one can help break down complex topics, and it doesn't have to be overwhelming.
Yeah, you don't have to become an expert overnight.
Right.
Just start with the basics.
I think even committing to one book a year, even a simple one on budgeting or investing basics, can really be a game changer.
It's like a small investment.
Yeah.
Your financial knowledge that pays dividends over time.
Exactly. Okay, so before we wrap up this part, I wanted to get a quick rundown from you of some recent financial news that might impact everyone listening.
Okay, so let me give you some headlines.
Okay, awesome.
So in the U.S., the Federal Reserve is hinting at potential interest rate cuts.
Okay.
And this could affect everything from mortgages to investment returns.
Wow.
So if you're in the U.S., it's definitely something to keep an eye on.
Okay.
In Canada, housing prices are creeping up again.
Oh, no.
Yeah, making home ownership even more challenging,
Yeah.
especially for first-time buyers.
Yeah, that housing market's crazy.
It's a roller coaster.
Okay, what about Dubai?
Well, in Dubai, the government is rolling out some interesting policies
Okay.
designed to attract international investors,
Cool.
particularly in real estate. So that could mean some exciting opportunities.
Yeah.
But as always,
Yeah.
do your homework before jumping into any investment.
Right, for sure.
And in India, the stock market is on fire right now.
Wow.
And we're seeing a surge in interest in investing,
Oh,
especially among younger generations.
that's awesome.
It's great to see more people taking charge of their financial futures.
Yeah.
But remember, investing always involves some level of risk.
Right, of course.
So don't put all your eggs in one basket.
Yeah, that's a lot of information to digest.
It is.
But staying informed about financial trends, both globally and in your specific region, can help you make better decisions for your own financial journey.
Absolutely. Knowledge is power.
Right. Welcome back, everyone. In part 1, we tackled some big money mistakes and how they can play out differently around the world, but we are not done yet. There are more financial pitfalls to uncover.
You know, it's interesting. We often focus on the big, obvious financial decisions, but sometimes those smaller, seemingly insignificant choices can really have a ripple effect on our financial well-being.
Right. It's those little habits and blind spots that can really add up over time.
Exactly. So for this part, let's zoom in on some of those less talked about money mistakes and see what we can learn from our sources.
Sounds good to me. Where should we start?
Well, our sources briefly touch on the importance of insurance,
Okay.
but they don't dive into specific types.
Yeah.
And I think that's actually a good thing.
Okay.
It allows us to focus on the bigger picture.
Right. It's not about getting bogged down in all the nitty-gritty details of different insurance policies.
Exactly. It's about understanding the core principle, protecting yourself from financial risk. Life is full of unexpected twists and turns, and having the right insurance coverage can be the difference between weathering those storms and facing a financial disaster.
So you're saying it's not about insuring everything, it's about being strategic and understanding your individual needs.
Absolutely. And that's where talking to a financial advisor or an insurance professional can be really helpful. They can kind of help you assess your situation, whether you're single, married, have kids, own a home, run a business. All those factors play a role.
Yeah, it's like getting a personalized insurance roadmap.
Exactly.
And I think our sources also hint at another crucial point, actually understanding what your policy covers.
Yes. Don't just blindly sign on the dotted line and toss that policy document into a drawer. Take the time to read the fine print and be sure you know what's included and what's not.
Yeah, because it's not fun to discover that you're not covered for a specific situation when you need it the most.
Right. You don't want any unpleasant surprises. Okay, now let's shift gears a bit and talk about a mistake that's becoming increasingly relevant in our digital world: not protecting your online privacy and security.
Our sources don't spend a ton of time on this, but I get why they included it.
Right.
With so much of our financial life happening online these days, it's a huge vulnerability.
Exactly. I mean, think about it. We're constantly entering sensitive information online.
Yeah.
Bank details, credit card numbers, passwords into websites and apps.
Yeah.
And if that data falls into the wrong hands, the consequences can be devastating.
Right. Identity theft is a real threat. And it can take years to recover from the financial damage it causes.
Absolutely.
So what can we do to protect ourselves?
Well, strong, unique passwords are the first line of defense. So don't use the same password for multiple accounts, and make sure those passwords are complex and difficult to guess.
Right. And two-factor authentication is a lifesaver. Whenever a website or app offers it, enable it. It adds that extra layer of security, making it much harder for hackers to gain access to your accounts.
Absolutely. And be cautious about the links you click on in emails or on social media. Phishing scams are becoming more and more sophisticated, so don't click on anything that looks suspicious. If you're unsure, go directly to the organization's website to verify.
Right. It's better to be safe than sorry. And let's not forget about protecting our devices. You know, the smartphones and laptops that we rely on for pretty much everything these days.
Exactly. Keep your software updated, use antivirus protection, and be cautious about what you download. It's all about building good digital hygiene habits to safeguard your financial life.
Okay, moving on to a topic that can be a bit daunting, especially when you're younger: not planning for retirement. I feel like this is something that's easy to put off until later.
It is, and that's a common mistake. Retirement might seem like a lifetime away, but the sooner you start planning, the better off you'll be. Remember the magic of compound interest we talked about earlier?
Yeah.
Well, it works for retirement savings too.
Right. The earlier you start, the more time your money has to grow. It's like giving your investments a head start.
Exactly. Now, our sources don't go into specific retirement plans, as those vary widely from country to country, but they emphasize the general principle. Saving for retirement should be a priority, no matter your age or income level.
It's about forming that habit early on, even if it's just setting aside a small amount each month.
Right, and take advantage of employer-sponsored retirement plans if they're available. Those matching contributions are like free money.
Oh, yeah, for sure. If your employer matches your contributions, it's essentially doubling your investment.
Exactly.
Okay, here's a mistake that's especially relevant in today's consumer-driven world. Not shopping around for the best deals. I'm definitely guilty of this sometimes. It's easy to just stick with what you know or go with the first option that comes along.
I know what you mean. It can feel overwhelming to compare all the different options out there, but trust me, it's worth the effort. We're talking bank accounts, credit cards, insurance policies, loans, investment platforms, you name it.
Yeah, it's like we're conditioned to think loyalty is always rewarded.
Right.
But sometimes switching providers can actually save you a ton of money.
Exactly. Don't be afraid to negotiate either, whether it's a lower interest rate on a loan or a better deal on your internet service. Sometimes just asking can make a difference. Remember, companies are competing for your business, so don't settle for the first offer that comes your way.
That's a good point. And speaking of being mindful of our spending, let's talk about a mistake that can be really tricky to overcome. Emotional spending.
Yes.
We've all been there.
We've all been there.
That impulsive purchase that seemed like a good idea at the time only to regret it later.
Right.
Whether it's stress, boredom, or even just a fleeting moment of happiness, those emotions can really lead us to spend money that we hadn't planned on spending.
It's like our emotions hijack our rational decision-making. And that's why our sources emphasize the importance of becoming aware of our triggers. What situations or feelings tend to push you towards those impulse buys?
Right. Once you identify those triggers, you can start to develop strategies to manage them. Maybe it's taking a break before hitting that buy now button, or talking to a friend to process those emotions instead of heading to the mall.
Exactly.
Yeah.
It's about putting some space between the impulse and the action, giving yourself a chance to make a more conscious decision. And remember, if you do slip up, don't beat yourself up about it.
Yeah.
It happens to the best of us.
It does.
It's all about learning from those experiences and developing healthier financial habits over time.
All right, so now let's shift gears a bit and talk about a mistake that can impact not only your financial well-being, but also your relationships. Not communicating effectively about money with your partner.
Oh, money often a taboo topic, especially in romantic relationships.
Yeah, it can be uncomfortable, even awkward to talk about.
It can be, but you know what's more uncomfortable? Financial stress, resentment, and arguments stemming from unaddressed money issues.
Yeah, it's like our sources are saying that open and honest communication about money is the foundation of a healthy financial partnership.
Exactly. And that means talking about your income, your spending habits, your debts, your savings goals, all of it. It's not just about splitting bills or figuring out a budget. It's about being on the same page financially, working together towards shared goals, and supporting each other's financial well-being.
Yeah, it's about transparency and teamwork.
Exactly.
And that's especially important for those who are self-employed or have irregular incomes.
You're right. Our sources touch on the importance of managing cash flow effectively when your income isn't consistent.
Right, and this is where budgeting becomes even more crucial, right?
Absolutely. You need to have a clear understanding of your income and expenses, even when they fluctuate. And it's wise to set aside money for taxes and build up a larger emergency fund to cover those lean months.
Right. It's about being proactive and having systems in place to kind of ride those income waves without jeopardizing your financial stability.
Exactly. Now let's dive into a mistake that's often associated with investing, but it can apply to other areas of personal finance as well. Not diversifying.
Ah, yes. Don't put all your eggs in one basket, right? We've all heard that one.
Exactly. And when it comes to investing, diversification is key to managing risk. Our sources don't go deep into specific investment strategies, but they emphasize the importance of spreading your investments across different asset classes.
So instead of putting all your money into, say, stocks,
Right.
you might also invest in bonds, real estate, or even commodities.
Right. The idea is that if one investment performs poorly, others might perform well, helping to balance out your overall portfolio. And diversification isn't just for investing. You could apply this principle to your income streams, your skills, even your experiences.
So instead of relying solely on one job,
Yeah.
you might have a side hustle or some freelance work.
Right.
Instead of putting all your energy into one skill, you might develop multiple areas of expertise.
It's about having options and spreading your risk.
Exactly. It's like building a more resilient financial foundation. Okay, so now let's shift gears and talk about a mistake that's closely tied to our values and priorities. Not being mindful of our spending habits.
Oh, yeah.
We live in a world that's constantly bombarding us with messages to buy, buy, buy.
Right.
And it's so easy to get swept up in that consumerist mindset and lose sight of what really matters.
And that's why our sources emphasize the importance of mindful spending. It's not about depriving yourself. It's about aligning your spending with your values and goals.
It's about asking yourself questions like, do I really need this? Or will this purchase bring me lasting joy?
Exactly. It's about choosing quality over quantity, experiences over possessions, and investing in things that truly enrich your life.
It's about shifting from a mindset of, I want it now, to what will bring me long-term happiness and fulfillment.
Exactly. And, having clear financial goals can make a huge difference in making those mindful spending choices.
Right. If you don't know where you're going, it's easy to get sidetracked by those tempting impulse buys.
Absolutely. Our sources emphasize the importance of setting specific, measurable, achievable, relevant, and time-bound goals, or SMART goals, as they're often called.
Right. It's like setting your financial GPS.
Yeah.
Without it, you're just driving around aimlessly.
Exactly. So whether it's saving for a down payment on a house, paying off debt, or investing for retirement, write down those goals, make a plan, and break them down into smaller, manageable steps.
Okay, here's a mistake that can sneak up on you and cause some serious damage. Not checking your credit report regularly. I'll admit, I don't always think about this one.
Yeah, it's easy to forget about, especially if you're not actively applying for loans or credit cards. But it's essential to review your credit report periodically to ensure that the information is accurate and to catch any errors or signs of identity theft.
Okay, but how often should we be checking in? Where do we even go to do that?
Well, you're entitled to a free copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once per year. You can request these online or by mail.
So it's like a free annual checkup for your credit health.
Exactly. Take advantage of that and scrutinize those reports. Look for any inaccuracies, unfamiliar accounts, or suspicious activity. If you spot anything amiss, dispute it with the credit bureau right away.
Okay, that's good to know. Now let's talk about something that can make managing your finances a whole lot easier. Automating your savings and bill payments. I'm a huge fan of automation. It's like having a personal finance assistant working behind the scenes.
I agree, it's a game changer. So setting up automatic transfers from your checking account to your savings account each month ensures that you're consistently saving towards your goals, even when you're busy or forgetful.
Yeah, it's like paying yourself first.
Exactly.
And automatic bill pay is a lifesaver for avoiding those late fees and missed payments.
Right. It takes the hassle and stress out of managing your finances. And while we're on the topic of making life easier, let's not forget about the value of employer-sponsored benefits.
Oh yeah, this one's especially important for those just starting out in their careers.
Absolutely. Many employers offer a range of benefits, from health insurance and retirement savings plans to life insurance and disability coverage.
Yeah, it's like a whole package of financial perks that can really make a big difference in your overall well-being.
Exactly. So take the time to understand what's available, ask questions, and enroll in the plans that make sense for your needs. Don't leave free money on the table, especially when it comes to things like retirement contributions.
Okay, so let's tackle a mistake that can be a real source of financial stress. Not setting a budget. I know budgeting isn't the most exciting topic, but it's crucial.
Yeah, it's like the foundation of good financial management.
Yeah.
And, it doesn't have to be complicated or restrictive. There are so many budgeting methods out there, from the classic 50-30-20 approach to more tech-savvy options using budgeting apps.
Right. The key is to find what works for you and stick with it. It's about having a plan for your money, tracking where it goes, and making conscious choices about how you spend it.
And a well-crafted budget can actually give you more freedom, not less. You'll have a better sense of where your money is going and how much you can spend without feeling stressed or guilty.
All right, now let's talk about a situation that many people dream of, but can actually be quite tricky to handle. Receiving a windfall of cash.
Yeah.
So this could be an inheritance, a lottery win, or even a large bonus at work. And our sources emphasize the importance of seeking professional financial advice when you suddenly come into a significant sum of money.
Yeah, it's easy to get caught up in the excitement
Right.
and make some impulsive decisions.
Yeah.
So having a financial advisor to guide you can help you avoid costly mistakes, create a plan for managing your newfound wealth, and make sure you're making smart choices for the long term.
Okay, on to a mistake that can have a ripple effect on your overall financial health. Not paying your bills on time. I'm cringing just thinking about all those late fees and penalties.
Ooh.
Yeah.
It's not just about the extra charges, though. Your payment history is one of the most important factors that determines your credit score, which can affect everything from getting approved for loans to securing an apartment.
Yeah, it's like your financial track record.
Exactly.
So setting reminders, using automatic bill pay, or even just writing those due dates on a calendar can make a huge difference.
Absolutely. And if you do find yourself facing financial difficulties and can't make a payment, reach out to your creditors right away. Communication is key.
Yeah.
They might be willing to work with you on a payment plan or offer temporary relief.
Right. It's always better to be proactive and address those issues head on.
Absolutely.
Okay, let's talk about a mistake that can be incredibly tempting, but ultimately detrimental to your financial well-being. Trying to keep up with the Joneses.
Yes, social media can make this one even harder, right?
Oh, totally.
Yeah, it's easy to compare ourselves to others and feel pressured to keep up with their spending habits.
Right. It's like a never-ending cycle of keeping up with appearances.
Right,
But it can be a recipe for financial disaster.
exactly.
Mm.
So our sources encourage us to focus on our own financial goals, our own values, and what truly matters to us. Remember, what you see on social media is often a carefully curated version of reality.
Right. It's about defining your own version of success and happiness, not someone else's.
Exactly. Now, this next mistake is particularly relevant for entrepreneurs and small business owners, not separating your personal and business finances.
Yeah, it's tempting to just mix it all together, especially when you're first starting out.
I know it can seem easier that way,
Yeah.
but trust me, keeping those finances separate is essential for clarity, accountability, and protecting your personal assets.
So separate bank accounts, separate credit cards, separate accounting systems.
Exactly. It's like creating a clear boundary between your personal and professional financial lives.
Right.
Yeah.
Okay, on to a mistake that might seem small but can have big implications, especially come tax time. Not keeping good records.
Our sources are adamant about this one. Whether it's receipts, invoices, bank statements, or tax documents, keeping organized financial records is crucial.
It's not just for tax purposes, though.
Right.
Having good records can help you track your spending, analyze your finances, and make more informed decisions.
Exactly. So create a system that works for you, whether it's using spreadsheets, accounting software, or good old-fashioned file folders.
Right.
The important thing is to have a system and stick to it.
Okay, now let's tackle a mistake that can feel overwhelming and keep us from making progress. Not having a plan for dealing with debt.
Ugh, debt can be a heavy burden, both financially and emotionally.
Yeah.
But ignoring it won't make it go away.
Right, and our sources really emphasize this idea of facing your debt head on and creating a plan to tackle it.
Absolutely.
Whether it's creating a budget, negotiating with creditors for lower interest rates, or exploring debt consolidation options, taking action is key.
It's about moving from feeling powerless to feeling empowered.
Exactly.
And speaking of feeling empowered, let's talk about investing in yourself.
Yes. I love this one. This is something that our sources touch on indirectly,
Right.
but I think it's worth emphasizing.
Definitely.
It's the mistake of not investing in your health, your education, and your personal growth.
Right.
It's easy to get caught up in the day-to-day grind and neglect these areas,
Right.
but they are essential for our long-term well-being
Yes.
and, yes, even our financial success.
Absolutely.
Right.
Think about it. Taking care of your health can prevent costly medical bills down the road.
Yeah.
Investing in your education and skills can increase your earning potential.
And nurturing your personal growth can lead to greater fulfillment and happiness, which can positively impact every area of your life, including your finances.
It's a reminder that investing in yourself is one of the best investments you can make.
Absolutely. Now, here's a mistake that can lead to buyer's remorse and a dent in your bank account. Not doing your research before making major purchases.
Ah, yes.
So whether it's a car, a house, a new appliance, or even a vacation, taking the time to compare prices, read reviews, and understand the features and benefits can save you money and help you make a more informed decision.
It's about being a savvy consumer and not rushing into those big purchases.
Right.
Do your homework.
Okay, now this next mistake is something that we all struggle with from time to time.
Yeah.
Procrastination.
Oh, yeah.
especially when it comes to those financial tasks.
The procrastination monster
Right.
gets us every time.
It's so easy to put off things like budgeting,
Right.
investing,
Yeah.
or reviewing your insurance policies.
Oh, yeah.
It can feel overwhelming or even boring.
Absolutely. But procrastination can lead to missed opportunities, late fees, and unnecessary financial stress.
So how do we combat the procrastination monster?
Well, start by breaking down those big tasks into smaller, more manageable chunks. Set deadlines for yourself, create a schedule, and maybe even find an accountability partner to help you stay on track.
All right, on to a mistake that can be especially detrimental for young adults. Not establishing good credit early on.
Right. Your credit score is like your financial reputation.
Mm-hmm.
It can affect your ability to get loans, rent an apartment, and even secure certain jobs.
Right. So how do we build that good credit history?
Well, start by using credit responsibly. Get a credit card, use it for small purchases, and pay off the balance in full and on time every month. Avoid maxing out your credit cards and try to keep your credit utilization low.
Okay, and speaking of being proactive, let's talk about negotiating.
Yeah.
This is something that so many people shy away from, but it can be such a powerful tool for saving money and getting what you want.
Yeah, absolutely.
Whether it's your salary, your rent, or the price of a product or service,
Right.
don't be afraid to negotiate.
Right. The worst that can happen is they say no.
Exactly.
But you might be surprised at how often you can secure a better deal simply by asking. Remember, you have nothing to lose.
Yeah, for sure.
And potentially a lot to gain.
It's about advocating for yourself and not being afraid to stand up for your financial interests. Okay, so this next mistake is one that many people avoid thinking about.
Yeah.
But it's crucial. Not having a will or estate plan. No one likes to think about their own mortality.
Yeah, it's not the most pleasant topic.
But having a will in place ensures that your assets are distributed according to your wishes, and an estate plan can help to minimize taxes and probate costs.
Right. It's about taking care of your loved ones and ensuring that your affairs are in order, even when you're no longer here.
Oh, okay. On to a mistake that can be tempting but ultimately puts you in a financially vulnerable position. Borrowing money to pay for depreciating assets.
Oh, yeah.
So think about things like cars, electronics,
Yeah.
even clothing.
Uh-huh.
These items lose value over time.
Right. They depreciate.
Yet many people go into debt to purchase them.
Yeah, they're essentially paying interest on something that's constantly decreasing in value.
Right.
It's a recipe for financial strain.
Yeah. So if you can save up for these purchases instead,
Yes.
or consider buying used or refurbished items to reduce the cost.
Yeah, that's a great way to save money.
Okay, on to a mistake that's become all too common. Relying on those predatory payday loans or title loans.
Ugh, those are dangerous.
Yeah.
These types of loans are designed to trap borrowers in a cycle of debt with their exorbitant interest rates and fees.
Yeah, it's like a financial quicksand pit.
It is.
It's easy to get sucked in, but incredibly difficult to climb out.
Exactly.
Right.
So, if you're facing a financial emergency and need cash quickly, explore alternative options. Talk to family or friends, negotiate with your creditors, or seek assistance from a reputable credit counseling agency.
Right, those options might take a bit more effort,
Yeah,
but they are far less risky than falling into that payday loan trap.
absolutely.
Yeah.
Now let's talk about a decision that might seem generous,
Yeah.
but can actually put your own financial well-being at risk. Co-signing a loan for someone else.
Right.
It's often done with the best of intentions, but it's essential to understand the risks involved. When you co-sign a loan, you're agreeing to be legally responsible for that debt if the primary borrower defaults. So you're essentially putting your own credit score and financial stability on the line.
Yeah, it's a big decision, and it's not one to take lightly.
Absolutely not. Okay, let's talk about a mistake that's at the core of many financial struggles. Living beyond your means. It's tempting to want it all and want it now, but spending more than you earn is a recipe for debt, stress, and a constant feeling of being behind.
It's like running on a financial treadmill.
Yeah.
You're working hard, but you're not actually getting anywhere.
Exactly. So our sources emphasize the importance of creating a budget, tracking your expenses, and making conscious choices about your spending.
It's about aligning your lifestyle with your income and finding ways to enjoy life without constantly stretching your finances.
Absolutely. Now let's talk about a mistake that might seem surprising in today's digital world. Not having a bank account.
Yeah, I think we often take this for granted, but having a bank account is essential for participating in the modern economy.
Exactly. It's a safe and convenient way to manage your money, receive direct deposits, pay bills, and access various financial services.
Right. So if you don't have a bank account, consider opening one at a local bank or credit union. It can really make your financial life a whole lot easier.
Absolutely. It simplifies things.
Okay, here's a mistake that can be frustratingly easy to make. Paying for unnecessary fees.
Those pesky ATM fees, overdraft fees, and account maintenance fees can really add up over time.
It's like throwing money away.
It is.
So be mindful of the fees associated with your financial accounts and services.
Yeah.
And explore ways to avoid them.
Definitely. Choose banks that offer free checking and ATM access, set up alerts to avoid overdraft fees, and be aware of any hidden charges.
Okay, now let's talk about taking advantage of free stuff.
Oh, yeah.
Specifically, free financial resources.
Absolutely.
There's a wealth of information available online, in libraries, and even through community organizations to help you learn about personal finance, budgeting, investing, and more.
So take advantage of these resources. They can empower you to make informed decisions and take control of your financial life.
Okay, on to a mistake that's easy to overlook. Not reviewing your insurance policies regularly? I'll admit, I'm not always great at this one.
Yeah, it's easy to let those policies gather dust.
Yeah.
But life changes. Your needs change.
Yeah.
And the insurance landscape changes.
Right.
So it's essential to review your policies at least once a year to ensure you have the right coverage at the best rates.
It's like an annual tune-up for your insurance.
Exactly. Compare quotes from different providers and don't be afraid to switch if you find a better deal.
Okay, let's revisit a mistake we touched on earlier, but it's worth repeating. Not saving for retirement early enough.
Right. Time is your greatest ally when it comes to retirement savings.
Yeah.
So the sooner you start, the more time your money has to grow, thanks to the power of compound interest.
Right. So even if you can only contribute a small amount right now, start today. Take advantage of those employer-sponsored retirement plans and consider opening an individual retirement account, IRA, to boost your savings even further.
Exactly. Start small, be consistent, and let time work its magic.
Okay, now let's talk about a mistake that can be tempting, especially when you hear those enticing investment pitches. Investing in something you don't understand.
Oh yeah, those get-rich-quick schemes.
Yeah.
It's easy to get caught up in the hype or the promise of quick returns, but it's essential to do your research before investing in any financial product or service.
Right. Don't just take someone else's word for it.
Exactly. Understand how it works, what the risks are, and how it fits into your overall investment strategy. And if it sounds too good to be true, it probably is.
Yeah, for sure. Now let's talk about the importance of having a financial plan.
Ah, yes. The roadmap to your financial future.
Right.
It outlines your goals, your strategies, and your timeline. It helps you to stay on track, make informed decisions, and achieve your financial aspirations.
Yeah, and working with a financial advisor can be incredibly helpful in creating a personalized plan that aligns with your specific needs and goals.
Absolutely. They can provide expert guidance and support.
Okay, now let's talk about a mistake that can be incredibly damaging both financially and emotionally. Gambling.
Oh, yeah.
It's important to remember that gambling should be viewed as entertainment,
Right.
not as a way to make money. Set limits on how much you're willing to spend, and never gamble with money you can't afford to lose. And if you're struggling with a gambling addiction, seek professional help.
Absolutely. Your mental and financial well-being are paramount.
Okay, on to a mistake that can be easily avoided. Not paying attention to your bank statements and credit card statements.
Yeah, it's tempting to just toss those statements aside.
Yeah.
But take a few minutes to review them each month. Look for any errors, unauthorized transactions, or suspicious activity. Early detection can save you money and headaches down the road.
Right. It's always better to catch those things early. Okay, now let's revisit the importance of insurance. We talked about this earlier.
Right.
But it's worth emphasizing again. Not having adequate insurance coverage can be a major financial setback.
Yeah, it's like a safety net
Yeah.
that protects you from the unexpected.
So from health insurance and auto insurance to homeowners or renters insurance and even life insurance.
Right.
Having the right coverage can protect you from financial ruin in case of an accident, illness, or other unexpected event.
It's about having that peace of mind knowing that you're protected. Oh. Now, let's talk about a mistake that can limit your financial options. Not having a good credit score. We talked about this earlier, but it's worth reiterating. Your credit score is like your financial report card. It's used by lenders, landlords, and even some employers to assess your financial responsibility.
Right, so it's essential to build and maintain good credit by paying your bills on time, using credit responsibly, and monitoring your credit report regularly.
Exactly. Treat your credit score like a valuable asset, because it is. Okay, let's talk about a mistake that can lead to clutter and a financial drain. Buying things you don't need.
Yeah.
We all do it sometimes.
Yeah, we do.
But before you make a purchase, pause and ask yourself,
Yeah.
do I really need this? Can I afford it? And will this purchase bring me lasting joy? It's about being mindful of your spending habits and choosing to invest in experiences, relationships, and personal growth over material possessions.
Okay, so now let's talk about the importance of having a savings plan.
A savings plan.
Yeah.
Very important.
Whether it's saving for a down payment on a house, a dream vacation, or simply a rainy day fund, having a savings plan in place can help you to reach your financial goals faster and more efficiently. Experts to the team.
Welcome back to the final part of our deep dive. We've uncovered a ton of money mistakes, from the big obvious ones to those sneaky little things that can trip us up.
Yeah, and now it's time to shift gears a bit.
Okay.
We want to explore some of those often overlooked aspects of financial well-being.
Our sources kind of subtly hint at these, but they don't go into a ton of detail.
Gotcha. So these aren't necessarily like mistakes, but more like blind spots that can kind of hold us back.
Exactly. It's like those things we don't even realize are affecting our financial progress.
Okay, I'm intrigued. What's the first blind spot we should shed some light on?
Well, our sources mention net worth, but I think it deserves a little more attention.
Okay.
You know, it's not just some fancy number for the wealthy.
Yeah.
It's actually a vital sign of your overall financial health.
You know, I've always found net worth a bit intimidating. It feels like something only accountants and, financial gurus really understand.
It's actually much simpler than it sounds. Net worth is simply the difference between what you own your assets and what you owe your liabilities. It's like a snapshot of your financial position at a specific moment in time.
Okay, so my house, my savings, my investments, those are all assets.
Exactly.
And then my mortgage, my student loans, any credit card debt, those are my liabilities.
Precisely. Subtract your liabilities from your assets, and voila, you've got your net worth.
Okay, that makes sense. But why is tracking this number so important? Is it just about seeing a bigger number?
It's more than that. Tracking your net worth over time allows you to see trends and patterns in your financial behavior. If your net worth is steadily increasing, that's a great sign. It means you're building wealth and making good financial decisions.
But if it's staying the same or worse going down, that's kind of a wake-up call.
Exactly. It's a signal to look at your habits and maybe make some adjustments. Think of it as a financial checkup.
Gotcha. Like a financial checkup to see how healthy your finances really are.
Exactly. Okay, so now let's move on to another often neglected aspect, having a financial advocate.
Okay, a financial advocate. Is this like a financial superhero who swoops in and saves the day?
Well, maybe not a superhero, but definitely a valuable ally. A financial advocate can be anyone who provides guidance and support as you navigate the often confusing world of personal finance.
So this could be a financial advisor, a mentor, maybe even a friend or family member who's really good with money.
Precisely. It's someone you trust, someone who understands financial matters, and someone you feel comfortable asking questions and getting advice from.
I think having that sounding board is especially crucial when you're feeling lost or unsure about a big financial decision.
Absolutely. A financial advocate can help you make better choices, avoid costly mistakes, and stay motivated on your financial journey. They can offer a different perspective and challenge you to think about your money in new ways.
It's like having a financial coach in your corner, cheering you on and helping you stay focused.
Exactly. Now, this next point is something we've talked about throughout our deep dive, but it's so important it's worth repeating. The power of patience and consistency in building long-term wealth.
It's so easy to get caught up in wanting those quick wins and overnight successes.
Right. Especially in today's world where everything is so instant.
Exactly.
Yeah.
But real financial success, that rarely happens overnight, right?
It rarely does. It's a marathon, not a sprint.
It takes discipline, perseverance, and sticking with it even when you don't see results right away.
Exactly. Think about building a successful business, or paying off a lot of debt, or growing a really solid investment portfolio. Those things don't happen overnight. They take time, effort, and consistently making smart choices.
It's like planting a seed and patiently nurturing it, knowing that eventually it will bloom into something amazing.
That's a great analogy. And that brings us to our final blind spot, the importance of ongoing financial education.
I love this one. It's like a reminder that learning about money isn't a one-time thing. It's a journey that never really ends.
Exactly. The world of money is constantly changing with new products, strategies, and technologies.
So we have to keep learning and stay up to date.
Absolutely. Read books, listen to podcasts, attend workshops, follow financial experts, find what works for you, and make it a habit to stay informed. The more you know, the better equipped you'll be to manage your money and make smart decisions for your future.
That's such a great point. Okay, well, that wraps up our deep dive into money mistakes and those often overlooked areas of financial well-being.
We've covered a lot, from the power of compound interest in investing early to the importance of budgeting, avoiding those debt traps, and having a solid financial plan.
We've explored the emotions we all have around money, the importance of communicating with our partners, and the impact of those small but consistent actions over time.
We've also emphasized that learning about money is a lifelong journey. It's a process of constant learning and growth.
So as we finish up, we challenge you to think about what really resonated with you today. What's one concrete step, no matter how small, that you can take this week to avoid those financial pitfalls, improve your money habits, and create a brighter financial future for yourself?
Remember, knowledge is power, and even tiny actions, when done consistently, can lead to huge results over time. Start today. Your future self will thank you for it.